Good morning, everybody. It's the 12th of October. We are Signal Centre Talking Bull. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Good morning, mate. I thought I looked pretty cool this morning, but you look smucking fart, mate. Look at that.
Branded top. Look at that.
Look at that.
Yes.
Beautiful.
Lovely.
Looks like Armin's, actually. It looks like too big for you, mate.
Yeah, it is a little bit. It's made for Armin's biceps, and my little runner's arms don't fit in it.
Yeah, okay. Well, we'll have to sort of do something about that.
Yes, indeed. Get me down the gym.
I feel jealous.
You look lovely anyway. Always.
Well, you know, I sort of I'm trying to make a bit of an effort, you know. Sort of be the,
it has been
you know, you were away last week. I had to sort of like up the game on the eye candy stakes, so trying to do my best there.
Lovely. Okay, let's get stuck in then. So, bit of volatility around. Stocks getting a bit of a hammering. We've got rising prices and interest rates poised to add £15 billion to the UK government's debt payments this year and beyond. So, going to be a serious squeeze on public finances. That's according to the latest report by the Institute of Fiscal Studies. Chancellor of the Exchequer, Rishi Sunak, is facing pressure to boost spending just as inflation tensions are rising, and this comes against a backdrop of increasing bets against the pound and with speculation that the Bank of England's efforts to tackle inflation would hit the growth outlook. So that clearly is having an impact, and we'll come on to charts very soon. In the industrial sector, Europe is cutting down on demand for natural gas in the latest sign of disruption caused by surging energy prices. Average consumption so far in October is 12% lower than its pre-pandemic levels. So people are actively keeping the heating off by the sounds of things in order to avoid higher prices. In the European Union, they're set to offer the largest ever green bond on Tuesday, aiming to raise €12 billion. This would surpass the size record set by the UK last month and put it on course to overtake the green market's dominant issuer, France, in the coming years. Market participants expecting it to trigger an absolute riot, in quotes, of investor demand at a time of surging interest for debt with sustainable labels. Everybody loving a bit of green. Overnight, Asian markets lost ground. The Evergrande missing its third bout of bond payments in as many weeks is causing more concern. Obviously, that story isn't going away. And obviously, threats of contagion are still very much a concern. So we've got a little bit of day chat today, nothing too much. There was a bit of a partial holiday, as it's been labelled yesterday in the States. The markets were open, but I'm not sure how much participants were involved. So, Steve, let's get stuck into some charts. Where do you want to kick things off today?
I'm quite happy to dive it straight into current cryptos. I did a video on it. It's will be available on the YouTube channel, and yeah, have a look at that. I did a little bit of a deeper dive into Bitcoin. I'll briefly go over it now. Let's get Bitcoin up. So I was looking for this ABC correction, thought we'd topped out at 52,700. We haven't, we've extended higher. So this ABC correction could be, I could be labeling this somewhere like that. Still believe in it until we get a break of the high 65,000. We're going to see decent resistance between 60, 61,000, and we've stalled at the 78.6 fib retracement level. So that's still looks good, still looks positive. There's no signs of reversal on Bitcoin yet. However, the altcoins or the alternative coins, the Ethereum, Ripple, Cardano, if they're not altcoins, sorry about that, but that's what I thought they were. They are stalling slightly, but I'll still drive it into what we see on Bitcoin. Triple bottom, extended higher. So maybe let's call this a triple bottom, actually, just not so we don't confuse things. Oh, right, that makes me feel a bit better. The measured move target was for 54,330. We've extended above there, so reached it on the 6th. There was a double bottom here as well. That extended the move higher to the 61.8, and it has gone further. So still looking pretty positive. On the daily chart, we had this reaction on the 10th, that was a couple of days ago, where prices were trading around about 55,000, spiked lower really aggressively. and rebounded. So we're still on the upward move in Bitcoin. Momentum is still positive, although slowing slightly. We're at overbought territory. That's not a reason to sell it. When it corrects from overbought, then there's maybe more of a reason, but you really have to see something else that's giving you a reason to sell it. Maybe a reversal formation, reversal candle, whatever. Don't sell it just because it's overbought. On the 4-hour chart, though, a little bit more drilling down into detail, bearish divergence. Prices are moving higher, momentum is stalling, moving lower. So that's a little warning shot, I suppose, in terms of the 4-hour chart. So shorter term timeframes looking a little bit toppy, but still really need to get down below 51,000 for me to be concerned about this Bitcoin rally. For me, still sort of holding higher. Now, looking at Ethereum, it's not quite the same story. It looks like we have stalled and we've started to correct. Looks like a bit of a head and shoulders formation here. Really, if we get a break of 3,270 or 3,330 or even 3,370, it will definitely put a little bit of pressure on, maybe lead to a further dip to the downside. We stalled at the previous swing high, 16th of September. That came in at 3,677. So yeah, looking a little bit tentative on the Ethereum side of things. A bit similar in Ripple, where we topped out at 123 and have reversed quite sharply from there over the last 48 hours. We've found a little bit of support coming in where we've got this congestion area, the bulls and the bears doing battle. We've got we're still in a bullish uptrend on this 4-hour chart, the cloud offering support, but still feels a little bit nervous or nervy in that. And the same with Cardano. 310 was the high, that made an all-time high, while Bitcoin was still languishing around about 45,000. Although saying languishing, it probably doesn't do it justice. Again, we had the previous swing moved lower. It stalled at 78.6% fib retracement, similar to what the Bitcoin is at the moment, but it's corrected more aggressively. For me, the 245 to 250 area in Cardano is the key level. Remember, all the way back in May, that was the all-time high, and we've punched through it, but we stalled and reversed. So 245 to 250, the real line of resistance. So really, the pressure now is on the downside. 202 is a break of there, could lead to a little bit more of an aggressive move, but 191 really is the line in the sand for me. Break below there and we're in a bit of trouble. Really needs to capture ground above 237, then above 250 to recover. That's the cryptos. Let's take a look at commodities. Oil still holding around at about that $80 level in WTI crude oil. Brent crude oil is 83.41. We're still in the bullish channel. No real sign of it slowing down. Let's take a look at the daily chart. Give us a candle to get our teeth into. Shooting star candle potentially. So let's watch that today. Obviously, we'll have inventories tomorrow. So if we manage to sort of sustain price action around here and don't push higher, then there may be a chance or an opportunity for a little bit of a correction. But I'd still believe that it's going to get bought into. We still seem to be heading higher. There's no real looking at the weekly chart. The fifth wave expected really to sort of like continue higher, even up towards $88. So still a bit of a way to go. We've got this real bullish supportive area. This is down in the sort of like $60-65 area. So a bit of a long way off. But yeah, no real signs of this slowing down, this oil run. So I'll be staying long of it. You'll get the small corrections, but dip buying seems to be prevailing at the moment. Natural gas has had a little bit of a hello there on the weekly chart. Shooting star candle last week, and it's under pressure this week. Taking a look at the daily chart, we can see at the last 3 days of price action have been negative. We're testing a previous support level coming in at 537. A break of there and a close below there opens up a move possibly to 475. So watching that bearish momentum, obviously, and we've corrected from the overbought area. On the gold, we're trading around about the mid $1,700 level, 1757 currently. Seems to have sort of like run out of ideas on gold. If we look at the weekly chart, we've opened and closed around the same level for the last 4 weeks. On the daily chart, really sort of no direction here. Still under a little bit of pressure. Still bearish, capped by the Ichimoku cloud support on the daily chart. So that's negative. That was a spike higher on non-farm payroll Friday. And we're still toying with this support level, 1745 to 1750. Then we should see really a return to the 1720 area. Still potential for a deeper dive down to 1677, I think, on gold. Again, that'll prove to be a pretty decent support level. But yeah, with the dollar strength still in the background, still remains pressured. 1834 on the upside is the key resistance level. A break above there, it opens up what we believe could be this bullish flag move on the weekly chart, which we expect to play out over the coming weeks and months. That's about it, Joe. Over to you on the FX.
Indices?
Did I not do indices?
No.
I was trying to get away from it. Let me just go into there. Okay, apologies for all you millions of indice listeners out there. So FTSE really sort of like indecisive over the last 3 or 4 weeks. No real sort of drive from anywhere. I know Joe mentioned the Evergrande situation. There's a delayed price on there of 295, which is nothing to be concerned about. But obviously, missing the third payment today could have an impact on the price action later on. It's definitely had an impact on the indices.
Weirdly, FTSE seems to be holding up quite well compared to everything else, and that's
I think it does.
because oil and mining are both still going well. Obviously, commodity prices are just keeping that FTSE price elevated compared to other markets. But you know, looking at that chart, there's nothing happening, is there? It's just so range bound in a really tight range.
This is months. We're going back to sort of like we hit this level back in May. Start of May, we're sort of trading around the same levels. Okay, we've had a bit of a range between 6810 and 7235, but that's, you know, compared to everything else, that's sort of like quite a small range.
Yeah, I mean, if you're a FTSE trader, you need to have a serious word with yourself. You can't have been making any money in that market lately, surely. It's just not going anywhere.
No, I mean, it's always been a very tricky market. It has that sort of dollar impact as well. So, you know, when you sort of like get that sort of like that drive into dollars, you know, normally sort of like indices have a sort of like a turnaround. It doesn't affect FTSE as much because obviously the companies that have their profits in dollars are quite prevalent in that market or in that indice basket.
Yeah.
Looking at the weekly on DAX, now this is a little bit more of a concern. 14,810, we've bounced off there last week. That was a bullish hammer, but it's been under pressure again this week, trading around 15,090 as we speak. The daily chart, we've still got this potential. It's a really messy, apologies about that, but it's a head and shoulders formation if you really squint really hard. Bearish momentum is stalling slightly, so you know there is still potential for it to hold at these levels and project higher. I'm not going to say it's definitely going lower, but it really needs to break that 14,800 to confirm the formation. Remember that. On the shorter term time frame, I'm still a little bit negative on the DAX. We're seeing this being pressured really by the APAC indices. So yeah, 15,110. The high today, that was slightly higher than yesterday's high, but really indecisive. We had a little bit of a move down prior to the open, down to about 15,000, but it's bounced from there, so slightly positive. On the Dow, 4-hour chart, again, it seems to have rejected this resistance level coming in around about the 35,000, pretty decent psychological level, but again, it's swung down to the cloud and seems to have bounced off here. 34,250. So nothing, no sort of panic stations there. You know, when will this Evergrande kick in to impact on everything else? Maybe there needs to be 1 or 2 other companies of a similar stature, similar nature, maybe even US-based ones, to sort of like to come out of the woodwork and say they've got the similar sort of problems to Evergrande. On the Nasdaq side of things, again, the tech has taken a little bit of a hit, bearish engulfing on the 4-hour chart, and just holding on to support, clinging on to support here at 14,600. A break of there in the Nasdaq, I think, opens up a move of a couple of 100-point potential to the downside. So watching that quite closely this afternoon. S&Ps, again, indecisive candles on the last sort of 8 hours, but it's held on to that cloud support. With the Ichimoku cloud, with these red clouds, the bottom line provides support as well as the top line. So hanging on there, and again, not far below, we've got these the swing low, which we keep reacting off the sort of like 42.75 area. We seem to be ranging really between this like 44.30 and 42.75, so a nice 150-point range in the S&Ps over the course of even a few days is pretty decent. Yeah, ASX 200, another commodity indice, going a little bit sideways, so really nothing to shout about there. China 50 stalled a reverse from the 16,176. Bearish outside candle forming currently on and that completes at 10 o'clock, so watch out for that. Hang Seng has been pressured over the last 12 to 18 hours, and as we can see, a really nice, one of my favorite formations, evening doji star formation. Really nice, played out really nicely. A break of 27,900, and the move could be extended. We can see the momentum dying completely, could get a crossover in the MACD. That could lead to further price action down below.
Nice. Nicely done, Steve. Thank you. Let's whip through this thing because I know you've got to get off. So let's take a look at, whoa, not that.
Whoa.
Whoa. Share a different screen. Dollar index. Okay, so not much going on yesterday. There was a decent move to the upside, which is helpful. Still projecting higher prices here on the dollar index. Need to overcome these resistance levels up here at 94.47, which is the 38.2% fib level, and above that we've got this blue line at 94.74. So these are the key levels that need to be overcome. Still of the opinion that we will see that, and we will see continued strength in the dollar index. So flipping over to Euro USD, similar situation, but on the reverse. We saw some weakness yesterday. We're looking for lower prices. There's no sign of the buyers stepping in just yet to try and reverse this. So the head and shoulders top is still very much active, and we're looking for lower prices, potentially down to this kind of region, down to 110.00 over the short to medium term. Now, in terms of what else is going on in FX, there have been a few decent breakouts. And as technical traders, Steve, we love it when we see a nice breakout. And this is one such example. This is Aussie Yen. So yesterday, there was a big move to the upside. I think it was almost up 2%, smashing through these resistance levels that I've got drawn on the chart. So I now need to reverse the thinking here and use those as support, because I believe what we've seen here maybe is some sort of inverse head and shoulders form on the daily chart. So we can get that drawn on. So starting up here down to the left shoulder, head, neckline, right shoulder, and we've quite convincingly burst through that. So looking really good. Obviously, this is mainly down to yen weakness rather than Aussie strength, although we are seeing some reasonable strength across the board from Aussie, given its links to commodities. Looking at elsewhere at some of the other markets linked to Aussie, this is Euro Oz. Again, looks like another head and shoulders here. Left shoulder, head, right shoulder. Really nice breakout, impulsive move to the downside, and no sign of that slowing. So when these sort of support and resistance levels are broken and you see continuation in the direction, that's always a good sign for technicians and technical analysts. Euro yen, another situation where yen weakness is prevailing. We've seen trading within this range for a number of weeks. really big push above the resistance level yesterday at 130.56, and we're holding above it at the moment. So be looking for some sort of pullback, maybe as a retest, and then maybe a go again on the upside. And in terms of targets, I think given how nice this structure is, this range, you would maybe look at projecting higher prices based on the range up at these kind of levels up here, which takes us back up to these highs that we saw back in June. So looking pretty strong on that front as well, and no sign that this yen weakness is set to stall anytime soon. Looking at cable, this is under pressure. We did see a bit of a rally back, but yesterday we posted a nice looking reversal candle. So we touched these levels up here, 50% of the recent down move. We posted this shooting star looking candle, and it looks like we're set for lower prices. The volume wasn't particularly supportive on this move higher. Yes, there was a big volume spike here, but it really has faded. And I think we could be set for lower prices there. So I'll be looking to sell into rallies on cable right now. Looking at some of the New Zealand dollar currencies, this one caught my eye, New Zealand dollar CAD. A bit of a battle between these sort of commodity currencies, I suppose. Really big support level down here at 86.27, which seems to be doing a decent job of holding. We have to go back to 20th of October last year when this support initially formed. So if you are a speculative trader looking for a decent opportunity today, maybe this could be it. Trading in a nice range from a risk reward perspective, buying close to the lower end of the range with a tight stop below the lows, targeting a move back up to the upper end of the range. About 4.6R on offer potentially there. So quite like the looks of that. New Zealand dollar, Japanese yen, that's trying to break above resistance here at 78.65. We haven't closed above it yet. We are pushing above today following that really big impulsive candle that we saw yesterday. So potential for a continuation higher there. If we look at that on the weekly chart, actually, maybe what we have is some sort of flag pattern, which would indicate a continuation higher in this. Sorry about that, but you get the point I'm making. There's the move higher, consolidation or a flag, and maybe looking to break out to the upside for a continuation higher over the medium term. Finally, looking at Dolly Yen, again, this is another example where yen weakness is very prevalent. We've broken out above resistance here at 112.28. This is on a weekly time frame as well, and we're now looking to these kind of levels back here where there's been a number of touch points in the past going back to 2017. So the next step looks to be at 114.28 ish on Dolly Yen. So no sign of that slowing down at the moment. That's it from me.
Excellent. Well done, mate.
Okay, so news-wise today, we've got German ZEW, that's due out at 10 a.m., so not long to wait. The index is expected to fall to 17.6. What else have we got? We've got some comments from a Fed member later, or two Fed members, Clarida and Bostic. That comes in the wake of Friday's low NFP number, so we'll wait and see what they have to say about that and whether or not there's any indications about the next steps from the Federal Reserve. Anything? Oh, we haven't done gun to the head, have we?
No, just like I forgot indices. You've got gun to head. Maybe that's a sign, Joe, of us getting old.
Yeah, so I went short of FTSE yesterday, and as we touched upon, it did absolutely nothing. There wasn't any follow through on that candle that we saw at 8 o'clock, and in fact, I ended up getting stopped out. But Steve, you went short of the DAX, so you would think the two would be fairly well correlated. Wasn't to be the case. You made 33 ticks or 0.33R to soften the blow a little bit on a collective basis. So all in all, not terrible, but hopefully we can pick us a winner each today. Anything you fancy?
I suppose the thing I'm going to go for is China 50. Maybe that Evergrande can sort of help us out here when it opens up. So risk reward. I'm always trying to nick a bit here, aren't I? Let's put a get a decent risk reward trade going. That's why I'm going to go 3-to-1 risk reward here. Getting short here at 15,860. The stop 16,160, quite close to the swing high. Maybe I should have it a little bit higher, but I'll tell you what, I will have it a little bit higher. There we go. And all the threes, mate. You know what I'm going to do now? Love it. Don't you just love that when it works?
Yeah.
Yeah, looking for a swing back down to here again. Hopefully, hoping for Evergrande to put a bit more pressure on.
Okay,
That's what I'm
cool.
looking at.
Lovely. I'm going to take a look at cable. This is the daily chart. So continues to trade lower. We've seen a bit of a rally into some levels of resistance that I've got on the chart. We posted this shooting star candle yesterday, and we're backing that up with further losses today. So drilling into the intraday charts, this is the hourly. Looks to be a bit of a rounding sort of formation taking shape here in the very short-term charts. I was planning on selling it there, but it's just dipped again. So I'm going to have to quickly change that. It's at 35.69. And I'm going to be targeting a move down to these sort of swing low levels at 134.12 with a stop loss at 136.16. So looking for further weakness on cable today. That's it, Steve.
Excellent.
We're done.
Well done, mate. Felt like a good
Okay.
one, that did.
Yeah.
Let's hope
Okay.
it
Well,
worked.
let's hope so. I hope everybody found that useful. We'll be back tomorrow with some more. And until then, trade safe, everybody.
Cheers.
Goodbye.